in the first week of June, I had a guest on the show. He is a former and newly retired professor from the American College, where Don has done a lot of work. He resides in North Carolina. He found me online, was listening to, I think, an Ed Slott podcast where I was interviewing Ed. He looked me up, he contacted me, and he sends me this email and says, I won't be your typical client, but I need your help. But long story short, he becomes a client. He shares with everyone. He's so good at teaching everyone else how to set up their retirement. But when it came to putting his own plan together, he realized he needed a coach or someone to help. And I noticed that on his statement of all the stuff he gave me, that he had a home equity line of credit and that it was growing substantially. And I started thinking, why does this guy with 23 different financial designations have this line of credit? Because it was a weakness in my game. I did not understand the reverse mortgage. So he was just here. He came to Branson, Missouri for vacation. He did a podcast with me. If you haven't seen it, you need to go to YouTube, type in Brad Pistole, Kevin Lynch. It just started to air. He talks about his own use of a reverse mortgage. And Don, this is the part where I'm saying they're going to call us in and call us liars at the Baptist church. You said he talked about making 7 to 8% on his home equity line of credit. How in the world is that possible?
Sure. Kevin's a friend of mine. I know his story very well. We'll just we'll say that. Good. One of the things he may have talked about is him making a voluntary payment. One of the most strategic ways of reverse mortgage, if you're listening, the amount of money you get is based off age, value of the home, interest rate, and there's a certain amount of money that goes in the middle of the triangle. A reverse mortgage must be a first mortgage, so any mortgages underneath have to be paid off, and what remains is what's called a GLOC, a GLOC. It's not a weapon, Brad. It's not. And I know you Missouri boys think of a GLOC as some sort. It's not that type of. It's not that type of weapon. Okay. But it is a financial weapon, a growing line of credit, GLOC, a growing line of credit. When you get a reverse mortgage, whatever money you haven't used is going to be in a line of credit, and that's going to grow. You can't make it not grow. And so it's going to grow. And people say, I've never heard of a growing line of credit. I've never seen one. I said, I bet you have. No, Don, I've never had a growing line of credit. I said, I'm sure you have. You just didn't know it. And I said, now, Mrs. Jones, Mr. and Mrs. Jones, have you ever had a Visa credit card? Maybe you flew on American Airlines and they say, we'll give you this credit card today, blah, blah, blah. And maybe it's a $2,500 credit limit on it, but you signed up for it. And then 2 years later, they raised it to $3,000 credit limit. And they keep raising your credit limit. And I said, that's a growing line of credit. You've seen it in your credit card. So when you start out with a reverse mortgage, let's say on the screen here, some people can't see, but it's $200,000. Here's this couple 65 years of age. They've got a $200,000 and they don't touch their line of credit. So notice at age 85, it's grown to $700,000 and 95, $1.4 million. Simply stated, the reverse mortgage has a built-in guaranteed minimum growth factor that cannot be frozen, capped, canceled, or reduced as long as you're meeting the obligations of the program.